So, as expected, the scenes coming out of the RBI seem to be as predicted by some of the economists out there. The Reserve Bank of India and the Monetary Policy Committee have decided to retain the repo rate at 6.5%. They've also retained the stance at withdrawal of accommodation. Now, while all six members agreed to retain the policy rate at 6.5%, only 5 out of the six members agreed for the stance question. There again, Jayant Verma, as he has been regularly opposing that stance of withdrawal for accommodation, he continues to maintain that the stance needs to change from where it is. As far as the inflation expectations are concerned, there's for FY24, the headline inflation number is expected to be about 5.1%. While this is within the tolerance band of 4% plus or minus 2%, the RBI governor was very categoric in his speech to say that it's not enough to be within the tolerance band and that the 4% target must be met, and that is what the MPC will focus on. On the growth side for FY24, the estimated growth, real GDP growth is expected to be about 6.5%. That's again a sort of a deceleration from 7.2% in FY23. So that's what the RBI is guiding for FY24. As far as the overall mechanisms are concerned on liquidity management, the RBI pointed out that the MPC and the RBI will remain steadfast in noticing any kind of liquidity issue that may come up in the banking system, and that they will support, provide any support that is necessary. But as of now, they are using the VRR, which is the variable rate repo auction, and the variable rate reverse repo auction to sort of manage the liquidity. Over the last 4 or 5 days, the RBI has conducted repeated variable rate reverse repo auctions in the market. Remember, this auction is essentially intended to pull out liquidity from the system because the system is sitting on excess liquidity. The RBI points out that there are many banks which are sitting on excess liquidity, but then there are also others who have to tap into emergency funding because they are short of liquidity. So there's a skewed liquidity scenario emerging in the Indian banking system, and the RBI intends to sort of put that under control. Among some of the measures that the RBI has announced as part of its prudential regulations, the RBI said that it's going to come out with a set of guidelines to handle compromise loan settlements, as well as the technical write-offs that banks do to manage their loan book. So the RBI will come out with comprehensive guidelines to ensure that this is done in a proper way. They also will come out with specific guidelines on how to deal in situations of natural calamities and the kind of support that the banks can provide to borrowers when doing settlements of those loans. Apart from that, a slew of measures on the fintech side of the story. The RBI is saying that the Bharat Bill Payment System, new guidelines will be issued so that the transaction flow improves and membership in the BBPS improves. The RBI is also looking at allowing RuPay prepaid forex cards to be issued. Currently, there are only debit cards and credit cards. So once the forex card comes in, then that increases the business case for RuPay. As far as digital lenders are concerned, the RBI is going to come out with specific guidelines for default loan guarantees. This was something that was a bit of a contentious issue as far as digital lending is concerned, because these digital lenders were providing first loss guarantees to larger lenders, which was something that the RBI absolutely does not allow. So specific guidelines in this regard will be actually quite helpful. So these are some of the key measures that the RBI governor pointed out. There are a slew of others, of course, but do tune into BQ Prime to learn more about that.